Welcome friends. Today we will discuss about what PMS and a stock broker will tell you, and you should not listen to those tall promises blindly. What we should do, what are the way so that we cannot fall in those tall promises and those traps. So first of all, see the PMS portfolio management schemes. There are so many companies in India or agencies which is providing portfolio management services, customized portfolio management services to their clients, HNIs. As per SEBI regulations, minimum requirement of fund for going PMS is 5 lakh. But most of them, they start from 25 lakh amount. So minimum amount you have to invest is 25 lakh. Some are going with 50 lakh or above. So this amount is a barrier in itself. They gave you toll promises, they will give customized service. You will get so much of return. I have given you details of those promises in our earlier videos. Link of those videos is in downside in box. You can see if you have not seen those videos. You will see all those. Apart from those things, I would like to mention one thing especially is despite their tall promises, they are not able to perform better than Nifty. Their performance are most of the PMS are pathetic. If you go to PMS Bazaar and you will see how pathetically they have delivered in past years. Out of 273 PMS schemes, 182 have given negative return in last year 2022 despite Nifty 50 falling by 0.09% only. But their performance out of 271, 182 in negative. Far more, some are up to minus 22%. Another thing is that if you see average return, those schemes are in minus 0.85%, whereas Nifty fall only 0.09%. So average also far below. So why we should go? Their charges, fixed maintenance charge is 2.5%. Apart from they will charge you for churning of portfolio. That means whenever you are buying and selling, their charge depends upon different stock broker, associated stock broker. It may be 0.1% to 0.3%. It depends. Another barrier is whenever you want to exit, they will charge you 1 to 3% depending upon tenure of your association with those PMSs. So you can see this huge charge, but return are not matching at all despite their tall promises. So in my view, you must avoid PMSs services. So what one should do? First of all, decide upon your tenure of investment. If you want to invest less than three years, no need to go with any PMS. Better to go with debt funds only, and there you will get better return. Of course, better than PMS. If your tenure of investment is more than say 7 years, only then think of going with equity investment. And there also you can hire if you cannot manage yourself or a specialized advisor only who can advise you, and it depends upon you whether through accept those advices or implement or no. Whatever advice you are getting, you should also cross check, see the performance of those stocks, and then you can apply and you will definitely get better return. In due course, you will also gain knowledge and you can continue your own journey. If you cannot do even though you can invest easily in index and there also you can expect around 15% of return without going any PMS where you didn't have to give so much hefty 2.5% of fixed maintenance charge. Most of the index fund are charging indirect less than 0.5%. So their charges are very minimal and in long term you go with the SIP, you will get wonderful return. Second thing, this stock broker, their promises or three things are of major adherence which we should look after. First thing, they will advise you to keep churning your portfolio, buy and selling, as they will get more and more brokerage. Even second thing, they will provide you margin money, especially these full service brokers, and lure you to go for intraday and swing trading, all this, so that you can keep on buying and selling, and they can make big money out of brokerage. You should be aware that if you are in loss, even though you have to give their brokerage, if you are using margin money and getting a loss, they will cut your exit from your investment and recover their money. Whether you are getting anything or no, they will not care. Third thing, they will provide you special tips to buy and sell more and more. So three things you should be taking care. You should not do churning or buying and selling, continuing one thing. Second thing, you should avoid intraday until unless you have your own expertise. Third thing, you should not use margin money or leveraging should not be done at all. You should play with your own money. And fourth thing, you should not believe on any tips. You should do your own research and go ahead with those researches that will keep you in good state. Another thing you can do nowadays, so many digital courses are available. CB is also providing, NS is also providing. You should enroll to those courses, and from there you will get plenty of knowledge. You can hire a good advisor who can advise you on those subjects, and you can keep on learning, and slowly you will have wonderful knowledge and use that knowledge in your favor. You must avoid such brokerage or broker service wherever these things happen. You can also choose to go with discount broker where you will save on this brokerage and you will not get any margin money or such specialized tips and pressure for keep buying and selling. So these things can be done and slowly you will be in good state and go ahead. Tomorrow you will see insurance broker how they are promising and what are their temptation and what they are telling. For today, this is for my message. If you find value, please do subscribe to this channel and share with your friends and colleagues so that they can also get knowledge and can avoid such mistakes. If you like, please do subscribe to this channel and so put your comments so that I can read that and implement in future videos. If you want to cover any subject of your interest related to the stock market, please do share with me so that that subject also can be covered. Thank you. Bye bye.